Happy Saturday morning, and it is time for the reality of real estate. Cynthia Hatch joins us, brightly colored. If you go to the video podcast of this, you see she's decided to fight the mid-January blahs with some bright yellows there. Good morning, Cynthia. How are you?
Doing good, Joe. I hope you're doing well.
Yeah, I don't have any bright yellow shirts. My wife put her foot down on that, but
Did she?
yeah, I can go run and get one of my pink ones. She let me
Oh,
keep those. Uh,
real men wear pink.
that's right. That's right. Especially every October. We'll get into that in October when we want to
Oh,
talk about
okay.
that. How is everything going this week? Did you have a good week?
Yeah, yeah, not too bad at all. I tell
Right.
you, the everything's shifting. It's less of a incredible favorable seller's market than I've seen in
Mhm.
5 years, six
Wow.
years, actually. So I think things are starting to stabilize, and I think 2026 is bound to be uh, a good one.
That's good.
Uh,
I'm glad to hear that.
mhm,
Knock wood.
mhm. Yeah, no
I
kidding.
actually have wood right here for that reason to knock it. That's it. But I mean, people have, still, there's a lot of people who are gnashing teeth about where we are, higher prices when it's a seller's market, people will tend to overpay for a house because there's so many people chasing it. Is there a
Right.
danger in people, I hate to use the specter of this, but '07, '08 happening again where people get underwater on their houses and have tough times paying their mortgages?
I think that it's already happening a little bit, but our area is just the central Virginia. Well, it's Augusta and Albemarle, and, on both sides of that mountain. Uh,
Hmm.
I did, nationwide, we were hit, but we weren't hit as badly.
I
This is
remember.
not something, yeah, this is not something that we're going through that was number one, it wasn't, uh, it was unexpected because of COVID, basically. So I
Hmm.
call it the COVID boom. And then,
Right.
but what was happening is you also had 2 and 3% mortgage rates,
Hmm.
and so and this started in even right before COVID, but once COVID hit, it just all the inventory went away, and the demand was so much higher than the supply that it created what we saw in a very heavily weighted and unfair sellers market. Okay.
Right.
And for all the sellers that are out there, that they capitalized very well on
Sure.
that. And but right now, but what we're seeing now is there are times, and our topic today is, hey, can't pay your mortgage? Well, you have options, and we're going to go over some of that. But I can tell you that people are still okay with their 2 and 3% mortgage, and they're most of the time they're able to work it out. We're just seeing it kind of a little bit of a trickle,
Hmm.
and
Hmm.
it's not much of those that, oh gosh, I've missed one, maybe more payments,
Right.
and we don't financial hardships actually can strike for any reason. I mean,
Hmm.
it could be something that, that maybe your work was downsizing. I mean, look how many companies went out of business during,
Hmm.
uh, first couple of years in the 2020s. And then also think of catastrophic illnesses
Yeah.
that
Yeah.
they just wipe out your savings,
Hmm.
you've and that's just for paying the deductible if you've got insurance even. And then you all kinds of other financial challenges that could happen, any kind of financial hardship that hits. There's a couple things that you try your best to still pay for, your health, a roof over your head, and a car to drive to work. And so those are things that, if you've missed some of those, it's better to miss some of those and get your rather than um, uh, I don't know what I could say, to choose when it gets down to the point where you have to choose to miss a car payment or miss a house payment.
Ooh,
Which one do you owe most on?
yeah. That's not a conversation you really want to make, but
You don't.
yeah.
Yeah. But here's the thing. Contact your mortgage servicer because there's usually some sort of relief option that could help you stay in your home.
Okay.
And there are certain, what are the options? Let's just, talk about that. I will say almost any of your options are going to affect your credit score negatively.
Mm,
That's not too cool, but if you can ask your mortgage servicer if you can qualify, and you have to qualify for these things, and there's about four of them, and that comes right to mind. That's like forbearance, deferment, loan modification, and reinstatement.
okay.
How do those work? Forbearance, well, that basically temporarily pauses or maybe even reduces somehow your monthly payments. Could be
Okay.
for a month, could be even up to a year.
Wow. And these are things that banks or the mortgage lenders, keep in their back pocket to make sure that, they don't wind up owning a house, which I found out in '07, '08. Banks, mortgage companies really don't like owning property.
They don't. It's not their bailiwick. Their
Yeah.
bailiwick is turning those dollars over and
Hmm.
over and over when it comes. That's why your mortgage gets sold in the first month or two after you've purchased a home. But unfortunately, forbearance, interest will accrue. And then you got to, repay on whatever that agreed upon schedule is at the end of your loan.
Right.
So instead of paying it off, in X Z years, you're paying it off in X years.
Hmm.
And so that's forbearance. Then there's also deferment. That's where you can stop or defer payments for as long as maybe 36 months.
Wow.
Yeah, and there's no interest, and then you repay the past due amount in one lump sum at the end of the loan. So
Wow. Yeah.
forbearance or deferment,
Yeah.
those things exist in the banking industry to keep you from having to go into any kind of foreclosure or something that we'll talk about that in a minute. But loan modification is another one. So
Hmm.
that what that does is it literally modifies the loan. It reduces the interest rate. It extends the long term, maybe to, but that would add, past due amounts to the loan balance as well. So those type of changes would actually be, you could work it out to where that loan modification is permanent for the life of your loan.
Wow. Okay.
Hmm And then
That's
you have
interesting.
something called reinstatement. This is where, I don't know, if your financial hardship was temporary
Hmm.
and you have the funds, you can arrange to pay the entire past due amount, including the late fees, and then you're golden. So that's the best one. We were probably going from worst to best.
That's okay.
But
Finishing up with the best is always good by my book.
but if interest rates are pretty favorable, where they are coming down right now, so I know that that we were down like to 5.99% for a minute, and but we're back up to 6.2, somewhere around there, but um, you could refinance completely if rates get
Mhm.
better. So if you're not in that 2 to 3%, okay,
Mhm.
then and it goes, and maybe you're in a 7% loan for some reason, um, and then you can refinance and get a 5% loan, maybe by if interest rates go down to 5%. I would say that most of the time it's not worth the closing costs and all that kind of stuff. They tell you I can do it without any closing costs, but that's not true. There
Mm,
are
really?
closing costs.
Okay.
It's actually built into the loan.
Oh, so it might not be per se a separate thing with a binder and you have to sit down and do something with it, but it's
Mhm.
factored into the loan itself.
Yeah, it is. Yeah.
Okay.
And so if you refinance completely and you end up lowering your monthly mortgage payments, the other way to lower those monthly mortgage payments, maybe you've got a lot of equity and it might even be at 6% a good idea to refinance. You
Hmm.
never know. Um, it- at that point, you can decide whether you want to take any money out, but that's what got a lot of people in big trouble during the boom in 2005 is well, you know, everybody that was refinancing, they were just taking all kinds of cash out and buying new cars and doing stuff like that, which isn't really wise. So,
Right. That
just
was the
because
other
you
part of
can,
'07, '08 is you had people who were packaging, and I remember the ads.
yeah,
People were on the beach and enjoying a vacation on their home improvement loan, and
yeah,
that was the sales pitches. Well, you
yeah,
use it for whatever you want, and I'm thinking,
sure,
gosh, because a home improvement loan is giving you the money based on the fact that if you do this, your home will become more valuable. And then we weren't putting
yeah.
money into those
Into
homes, and
that's right.
oh,
Yeah. And that's like if you're a buyer and a seller, and the seller says, I am not doing, if I give you seller concessions of, $5,000, I don't believe that you're going to fix that house.
hmm,
You're not going to really put it towards that. What are you really going to put it towards? And
right.
so sellers kind of like, yeah, give you a little bit of pushback on that. But if the buyer can use that for their closing costs, that means that they can, hold on to that and then maybe replace the carpet or something like that needs to be done.
Hmm.
But let's say we're looking at something of a financial hardship that maybe is longer term. And what that means is if you can't pay back the missed payments that you've made not made,
Right.
then the options come up in these, roughly four ways. So one of those options is basically, okay, you can sell your house, if you
Right.
have any equity to pay
Hmm.
off that loan, and then that equity you can take with you and, either buy another house or wait it out,
Hmm.
see what happens. That's the first thing. The second thing, you could actually initiate a short sale, and
Now, what
it's
is
not.
that? I mean, we heard it a lot
Mhm.
in '07, '08,
Yeah.
and I guess just the glancing blow of a press story
Mhm.
made it sound like as well you just accept less than the house is valued at. Is that it doesn't seem like that's all there is to it, though, is there?
It's not. And people say short sale, oh good, it won't take very long because they think short means the time frame. Oh no,
Mm,
has nothing to do with the time frame. The time frame is actually way longer than a normal sale. It could be months.
okay.
And sometimes even longer depending on how complicated it actually can become. But basically short sales when a homeowner sells their property for less than the outstanding mortgage balance. But it
Oh, okay.
has to be for lenders with the lender's approval. Okay.
Okay.
And the whole point is to avoid foreclosure when basically you might be underwater.
Mm,
So you might owe more than it's worth.
yeah.
And right. But the lender's going to accept a lower sale proceeds, and most of the time will take a loss and to recoup some of the money without the costs of foreclosure, because a foreclosure costs the bank a lot of money.
Hmm. Hmm.
Okay.
Absolutely.
A lot of legal fees and, and everything. And sometimes the house isn't in good condition, or maybe they left the house and of course there's no utilities on, and pipe bursts in the winter, or all these kinds of things. It can cost a lot of money for a foreclosure
Hmm.
to actually happen, and the bank does not really want to own it. So the
Right.
seller's going to avoid some major credit damage. It will impact their score, the score for their
Hmm.
credit score, that is, if you do a short sale. But I will tell you, it actually means that you're going to be, it's better to have a short sale than it is to have a foreclosure,
Okay.
or even a deed in lieu of foreclosure. And we'll talk about those two in a minute.
So,
And
so
here,
of the
mhm,
of the bad scenarios, a short
mhm.
sale is the better option if you can
Yeah,
pull it off. Okay.
absolutely. And the other, you got to think of this though. You have to have something that is um, some sort of release letter from the
Hmm.
bank. Okay, it's like exculpatory language, and it has to be worded in such a way that the bank is releasing them from blame, from any kind of fault, from any kind of legal liability. And this kind of thing, what this is doing is it also says in that language, it needs to say that the lender is agreeing to the short sale for the amount of the short sale and
Right.
not
Okay.
coming after you later to try and get the money that you were in default on.
Hmm.
It's like they're done and you're okay and you don't have to revisit this. It doesn't have to show up. If you
Hmm.
owed 200,000 and you could only pay off 150, that clause needs to say the bank is satisfied with that 150
Hmm.
and they're
They're
not
not
going
going
to
to
come
do.
after you for
Oh.
the other 50.
So let me ask you a question because I'm hearing all these things and I'm
Mhm.
thinking about a person who's in this position. And I had, owning your own business is a, terrifying enough ride, without, and, even the ones that are doing okay, it's never, if you've gone through any months where it's been tight, you're always now afraid of that next month it's going to be tight.
Yeah,
And it impacts your decision making.
yeah.
And you have to be really careful and have good advisors around you. Does this make a realtor important, even in a situation like this, somebody you trust to say, what should I do here?
Oh, absolutely. I think findhomesusa.com
Mm,
and you can see who we have on staff. And I will tell you that uh, we're versed in that sort of thing.
okay.
And you really need to you need to know one great big thing here, and that is that canceled debt could very well be reported to the IRS and oftentimes is considered taxable income.
Oh my gosh. Oh, the
Yeah.
hits just keep on coming.
Yeah. Yeah. Yeah.
Yikes.
But it's better than them coming after you for the other 50 grand, you
Fair.
know?
Yeah.
You know what I mean?
But I
Um,
wouldn't have even thought about a taxable income. I just lost
mhm.
my house, and now you're telling me I owe taxes on top of it. I could see that
Yeah.
really being a quagmire to get stuck in.
Yeah, there is probably a legal way somehow to get out of it, maybe. I
Hmm.
don't know. But I would recommend that if you're doing anything like this, you got to get a good CPA and a good realtor and a good attorney and go from there because I can tell you that during a short sale, the only thing it's short is the amount of money that the bank ends up getting. It's
Yeah.
usually short of what you owe. But when you turn around and do a foreclosure, that's kind of even, that I think it's even worse because the lender can force the sale at that point.
Right.
Okay. At least you know that you've got a realtor that's going to hold your hand through the whole thing with a short sale. You're going to be
Hmm.
able to negotiate. You've got the contract between a buyer and a seller, not between the not between the buyer and the bank. The
Right.
bank,
Right.
it's just a contingency in the contract, okay, when
Right.
it's a short sale.
And you
That
still
the
have
bank.
a
Mhm.
modicum of control. If it's a
That's
foreclosure,
right.
you better get a van and start,
Uh-huh.
loading stuff in there because the bank's going to put a padlock on you.
Well, exactly, because if we've got a short sale and we've got a contract on the property, a listing contract, that will help slow things down. A contract of purchase will
Hmm.
definitely help slow things down. And the asset manager, the bank, could say, you know, okay, we're put the brakes on everything because it looks like you're going to be selling that house. And
Hmm.
so, and then at the you get to the point where you send everything over to the bank, and the bank says, puts their seal of approval on it, and you get to go to closing the next month or whatever. And but with a foreclosure, when somebody's forcing the sale of your home, it feels different.
I'm sure.
You know, they're going to recover the debt, whatever they have to do. The foreclosure process does differ by state, just so you know.
Hmm.
Okay, in the state of Virginia, you when you buy a house, the deed is recorded first, then the mortgage or the deed of trust is recorded afterwards. You literally only own your property about a nanosecond. Okay. Because here's the thing. When you do a deed of trust, you are basically handing it over to the trustee, usually who works for the bank,
Hmm.
and that trustee is just, they step into place when a foreclosure starts.
Right. Otherwise,
Because
you don't need to worry about them.
that's right. They're otherwise they have no interest in being anywhere near your house. But a lender can initiate a foreclosure. You maybe after you miss about four payments. So if you're 120 days behind on your mortgage, they could initiate the foreclosure.
Mm.
And here's the thing in like for Maryland is a mortgage state. Okay, that's where you literally have to have a judge's gavel in order for the foreclosure to happen and go through. Okay,
Okay.
in the in a deed of trust state, which is the state of Virginia, in the deed of trust state, you don't have to have that. All you have to get is the trustee gives you a certain amount of notices
Hmm.
over a certain period of time, and they follow protocol, put a notice everywhere they need to on your desk and on your
Hmm.
in your email and on your door
FedEx
and
delivery truck and
yeah, every
certified letter.
yep, exactly. And so if you have that if that happens and it does go to foreclosure, and they don't care if you're in there or not, in the house or not, they will go to the courthouse steps, read that deed of trust out loud and at like an auction and yeah, and
Oh,
sell it right from under you. Hmm.
yikes.
Yeah.
It's like you said, it seems like there's more control, at least if you do these things.
Hmm.
So when should somebody call somebody? I mean, I guess you would call the bank. I don't know. I might call my realtor because
Yeah.
I have a more direct relationship with them than with the bank.
Yeah.
I don't know
But
who
you're
I would call, but that's what you shouldn't wait too
mhm.
long, I guess.
No, my gosh, please don't wait too long. Please don't wait too long. The thing is that you don't want to get under the auspice of, the like the short sale queen that was that, in back in I think it was Plano, te is it Plano or Plano in
Oh, Plano,
Texas?
Texas. Yeah.
Plano, yeah, okay, and that was Nicole and Espinoza, I think Espinoza. Anyway,
Yeah.
that was not too long ago. That was just like less than well, it was only a few months ago actually.
Right.
But there was a bunch of people arrested for that because she had a whole team and she was considered the short sale queen and
She was predatory.
she was predatory and and the thing is she committed federal violations related to mortgage fraud.
Mm.
Okay, but it was a conspiracy to commit wire fraud as well
Hmm.
and submit false statements. You cannot do that to financial institutions.
No.
No, and that so they came, they came after her, and she is, I don't know, they're facing up to 30 years in federal prison. But
Still, but
it's
a lot of people
and
had
here's the
their
thing,
lives hit
they
really
obtained
hard.
about 390,000.
Oh.
You daggone right, and yeah, it's unfortunate that that's what happened, but it's really um it's really unfortunate. So make
Hmm.
sure you find somebody that is definitely a person of integrity, okay?
Okay.
And for as your as a realtor and attorney and CPA. Um, if you go, there is something called, and this is what a bank will try and convince you of, okay? And that is a deed in lieu of foreclosure.
Okay.
You can voluntarily transfer the title of your home to your lender in exchange for the cancellation of the rest of your mortgage debt. Okay. So it was like you've been renting the whole place the whole
Okay.
time. Okay. You can do
How is
that.
that better?
I'm not, I think it's a little bit better than a foreclosure, but not as good as a short sale if you're in that financial position.
Oh, okay.
Okay.
All right.
Yeah. But a deed in lieu of foreclosure is unfortunately, they can also come back on you for the rest of the debt.
Oh,
Okay. hmm
so it doesn't close any doors.
It doesn't, it unfortunately doesn't. And
Okay.
so that there's the so that it might be less credit damage than it's going to be less credit damage than a regular foreclosure. A
Hmm.
deed in lieu of foreclosure is it's like they'll even sometimes offer like relocation help. We used to
Hmm.
call it cash for keys, okay,
Okay.
during the Great Recession. But it requires the lender approval no matter what. They're not going to do it on just any house. The house has to qualify and you have to qualify.
Hmm.
And the bank, doesn't have to go through a lengthy legal foreclosure process, so it saves them time and money. But the debt forgiveness, the lender's accepting the property, cancels the mortgage, and they are supposed to forgive the remaining balance, but they don't. So it's not all the time that they will. So if the
Hmm.
remaining balance depends on how much the remaining balance is.
Right.
Let's just put it that way. But you have to negotiate with that lender and agree on all kinds of terms, and that can be very stressful. So
Yeah.
basically,
On top of an already stressful time because for whatever reason you're in, the deep kimchi when it comes to income, whether you're,
yeah.
hey, you mentioned health. I mean, health is a double whammy. Suppose you're the breadwinner in the family and you have a health, so now you have the bills, but you've also
Mhm.
lost the income and, all kinds of things can happen.
Oh
And
yeah, absolutely. But I think if nothing else, just call them immediately. The minute you think you're not going to be able to make your mortgage payment, uh, call your lender, call your realtor if you have to, if it ends up being that you need to sell or do a short sale or something like that. Um, and we haven't even thought about this. What about a natural disaster? It
oh,
can
like a flood or something.
Yeah, it can damage homes and could completely disrupt your income sometimes.
Hmm.
I mean, remember it wasn't too long ago with the Southwest Virginia and
Oh, yeah.
North Carolina and all, and it was
Tennessee,
really
yeah, there was the flooding.
Tennessee and
That was
hmm
just 2 years ago.
yeah. But servicers, those loan servicers often will offer forbearance programs to those people that are affected by a natural disaster. So FHA, which Federal Housing Administration, they might even offer mortgage relief options. And also FHA insured loans, okay, that are
Hmm.
affected by these things, just talk to your loan servicer, and confirm that you are um, that you're eligible to be in the forbearance before you stop
Hmm.
making your payments.
Yeah, that's a good point. And you
Mhm.
have to, but I mean, I think the thing is you have to get over the fear of calling the mortgage lender
Yeah.
because they don't want to go down this road any more than you do. So if you sit down and go over all the options, but you have somebody you can trust, like the realtor you've dealt with in the past, or somebody that
Yeah.
has integrity that you can sit down with and match up what the mortgage lender is saying with what is truly going to be beneficial for you, is what I'm getting from you.
Yeah, that's right. That's right. And you can also contact a HUD counselor. That
Oh,
the HUD counselors, yeah, they can help as well. They can give you all kind, other ideas. And I'm sure the ideas are going to be very similar to, what I just went over.
mhm.
But it's the U.S. Department of Housing, and Urban Development, and see if you can't. And don't fall for just any HUD. Okay, you have to go to the counseling, the housing counseling, and I think it's answers.hud.gov. If it's not
Oh,
a
okay.
.gov, don't go there.
Yeah, I'm sure
Okay.
setting up a
Yeah.
website with HUD and it is,
Yeah. Go
HUDrelief.com or whatever.
exactly. Go to answers.hud.gov.
Good.
Okay. And try that because I think that they'll give you some good advice. And again, you're a trusted realtor, a trusted CPA, a trusted lawyer,
Yeah.
and I believe that you could come out at least in a little bit better shape than you could have if you didn't call them.
Yeah,
Okay.
and getting in there early. Cynthia Hash, it is Find Homes USA, and thank you so much for this. I mean, you talk about a reality of real estate. You made it real today, but thank you so much for everything, and we'll talk to you again next Saturday.
Okay, you bet. You take care. See ya.